Crypto Conversations. Enlighten us.
All right, guys. So to kick things off, to start the new year here, I want to focus on 3 tokens for 2024. Some ideas. These tokens also express more of a thematic view. So I'm going to talk through why I think what's happening on chain is interesting in a couple different places. But before we do that, I want to take a quick look at what's going on in the market. If you've been watching crypto over the last couple of weeks, over the Christmas to New Year holiday, everything was just on an absolute tear. And so you're seeing the market take a little bit of a breather here. Had some headline risk yesterday, a report that came out that said, we don't believe that any of the ETFs, as if that's really what matters here, are going to be approved. And that hit the market at a very illiquid time. And so you saw a lot of that leverage that maybe was added towards the end of this recent rally.
First of all, there's a 100% chance all of the ETFs are going to be approved. I don't know who would say anything other than that. There's a 100% chance.
Why do you think there's a 100% chance?
Because this has been the game plan all along. To move everything into the listed marketplace with respect to crypto has been the game plan from day one. For Gensler, for the SEC, for all the major firms. Nobody likes the money going into places, likes capital
they can't touch.
That they can't touch, and that they can't leverage. They can't leverage it, so they can't borrow against it, they can't short it, they can't create any banking revenue from it, they can't create any transactional revenue from it. Nobody wants to make, Coinbase, Binance, and any other firm around the globe rich from this. They want the money staying in listed, centrally cleared places. It's the whole game plan with this whole with all the new regulations and all the brokerage firms being required to put up to match capital for net capital requirements and everything else is all part of the game plan to get rid of OTC crypto at U.S. brokerages and U.S. financial institutions and move it all into ETF markets.
Okay.
That's it. Can you imagine like the whole concept of, why can't we have tokenized ETFs? Like the whole, sure. There's the whole game plan here, and the whole objective is to move everything back into a centrally cleared listed marketplace, and that's why there's a 100% chance it's all going to be approved. The alternative is that it stays OTC and it stays as dead money. It's never going to happen. And personally for me, I think it's great if we have both, but it's unfortunate the process that they have to go through to make this all happen.
Yeah, I like where you're at with the 100%. I think from a flows perspective, in terms of what supports the price, the ETF is certainly a tailwind. I think a lot of that goes against the first principles or the ethos of crypto, what crypto is, decentralization, self-sovereignty, self-custody.
But nobody cares about that. Like you're talking about, the people that created, the people that basically built these exchanges, built all the different blockchains, created the digital assets. Yeah, of course they all believe that. That's the beauty. That's what attracted their genius to building all this stuff. The problem is that genius alone does not transition into traditional listed finance, and that's the whole problem. Like you want to go build a different currency, good luck is right. Essentially. Wait till we come in and try to kill you.
Right.
Essentially it.
Well, we saw some volatility yesterday as a result of the headline, one way or the other. I agree with you. I don't think that these are going to be declined or rejected again. I think they are going to be approved. We could see that as early as January 10th. I don't think it matters as much long term as maybe the market has started to price in here. Curious if you guys think, because you do often see this, is this a buy the rumor, sell the news event? Okay.
Of course. But there are problems in crypto right now. And the problems are a lot of the new legislation that's being pushed by the SEC is creating a situation where the price of crypto could adversely affect our ability to trade crypto. And meaning that what's happening is the new requirements of making firms match basically the assets, crypto assets they have under their control, has created a situation where if crypto prices were to go higher, people are going to have to get rid of crypto.
Yeah.
So it's the most disingenuous situation. And so if crypto goes higher, firms are going to have to figure out ways to get rid of their crypto business. And if crypto stays here, they're gonna deal with it until the ETFs come out. It's just it makes no sense, but it's part of the control thing. Everybody's a freaking control freak, and putting a decentralized marketplace, to combine that with a very centralized marketplace, the way it's always been done, is not something that the regulators they deal with on a very, I don't think they deal with it on a practical level, and I don't think they deal with it on a kind of a futuristic level. I don't think they're able to visualize what the future is.
Yeah, and you're referring to Staff Accounting Bulletin 121 or
Yes,
SAB
exactly.
121. Yeah, well, hopefully that goes away, but I think to your point, Tom, it does kill crypto at traditional financial institutions.
I don't know how it goes away until Gensler goes away.
Yeah, fingers crossed here. So that's a quick look. If we just throw this up on the screen, just a quick look of performance here recently, taking a little bit of a breather after the holidays. But in some cases, and not everything that we have up here on the slide has pulled back all that much. We've seen quite the rally in a lot of these alt tokens. But if we jump to the next slide, want to just quickly look at kind of our expected moves, given where volatility is. Volatility's picked up quite a bit, as it often does in crypto. So we tend to see that positive relationship between price and volatility, where typically in traditional assets, as everybody knows, we see an inverse relationship. Vol goes up, price goes down. In crypto, we often see the opposite. Vol goes up, price goes up. So it can be a signal of kind of more of a bullish environment. If we look at where we are right now, on the next slide, we've got an IV rank near a one-year high for both Bitcoin and Ethereum. So we've got about an 80 when I ran these numbers. That puts Bitcoin vol at 69 and ETH vol at 72%. Quite a ways lower, though, from some of the prior peaks that we've seen. So as this asset has grown, or this asset class has grown, we've seen that volatility come in a little bit as it's matured. There's your expected moves. I think, and I'll talk about this at the end, the theme here is that I would expect that coming from the period we were in, you're going to see a lot more volatility in 2024. It feels really good when things go up 20% in a one-week basis. We tend to forget that they can get slammed back down, as we saw yesterday, but there's going to be a lot of trading opportunities, I think, as a result. So all of that said, I want to just jump to the next slide and beat this drum one last time. I don't think the ETF matters as much as everybody thinks. It's a conduit for liquidity, for flows. That's all that matters to this asset class. Here we were looking at the last 10 years. This is the price of Bitcoin, and that's global M2. You can think about that as liquidity. You can think about that as central banks printing money. When they stop doing those things, it trades sideways to down. When they ramp it up, which I think the market is starting to expect occurs at some point into next year, this asset tends to perform well. We'll see if that relationship continues, but that's really all that I focus on here. So that said, let's talk about a couple of themes and maybe some ideas as we head into the next year.
All right.
Do you agree with me or disagree that liquidity is all that matters?
Liquidity is number one.
Yeah.
I wouldn't say it's all that matters, but I'd say that
You can't be successful without it, I think.
you need two things. You need liquidity, and then you need efficiency around liquidity. So you can have liquidity, like an example of liquidity without efficiency to me would be like sports gambling. So here you have a very liquid market. You can bet $1 million on a game if you want to, but there's no efficiency in that $1 million, meaning the markets are too wide. So you need more than just liquidity. You need efficiency combined with liquidity. There's liquidity in real estate markets in most cases, but because of the type, but there's no efficiency. Like the spreads, the commissions, everything's too big. So one of the things that's beautiful about financial markets are you have liquidity and efficiency. You have both of those together, you can do anything. Yeah.
Well, in this market, once we started to see that view on liquidity or pending liquidity kind of shift here, going back to October, you really saw Bitcoin and other crypto assets take off. And it's been a good year for crypto. It's been one of the best performing asset classes, if not as an asset class.
2023, right?
Yes.
Yeah.
Bitcoin as a proxy for the space, up 160% in 23. You've got some individual stocks in the S&P that have done slightly better, but as an asset class, this is by far and away number one. It's been really positive in the sense as well that institutions are at the gate. Asset managers with more than 17 trillion under management are all waiting in line to get their spot Bitcoin ETF approved. And we've, as an industry, moved past some of the the dark clouds on the horizon have
Yeah,
cleared.
but they're all trying to get their spot Bitcoin ETFs approved so they can make money off the spot Bitcoin ETFs. I mean,
Yes.
they're not desperate to have. They're all gonna like. They're going to kill each other for whatever market share they can get, because somebody's going to get all the market share and everybody else is going to go out of business. They're going to shut them down. So there's going to be they're going to end up with 2 or 3 that are going to have 98% of the business, and everybody else, and they don't know who that is yet.
Right. Yeah, as you tend to see, I guess, in the ETF space, you have that first mover advantage.
Right.
Yep.
Right. So whoever gets the first approval, that's, you saw the same thing in digital assets. That's why we talk about Bitcoin. Because that was your first.
Well, it should be, it is a positive for the industry, especially when you look at what some of these leaders of different institutions, specifically Larry Fink at BlackRock, have changed their tune, complete 180. And so we've gone from basically this is an index for money laundering to this is the financial revolution.
Of course.
Underway.
But when has Larry Fink never done that? I mean, that's been the story of his career for 40 years.
Sure.
He's been, or whatever, 30 years. He's always been, flavor of the month guy. Jamie Dimon's kind of the same thing. They're all the same thing. Whatever, when digital assets first came out, these guys were like, well, we can't make any money on it, so these things suck. I mean, that was their whole thing. Like this is fraud, this is drug dealers, this is money laundering, whatever, because we can't make any money on it. And then as soon as they figure out, oh, we can make how much money on this ETF if we charge, 73 basis points? Okay, now we can make, a couple $1 billion. We love Bitcoin.
Yeah, right.
They'll find a way.
Yeah, we love digital assets.
Absolutely. So it's been a good year for crypto, but I want to talk about looking ahead. 3 areas or 3 things that I'm focused on. These are in no way recommendations. I would expect that you're going to see, as I mentioned earlier, a lot of volatility in the space. I'm not making a price prediction here. They could go down a lot. They have at times. But these are 3 things that I'm focused on if we jump to the next slide, 3 tokens, if you will. So I'm looking at Solana, Celestia, the ticker is TIA, T-I-A, and Blur. And so if we just start with Solana, jump to the next slide, it's had a hell of a run versus the dollar in the last year. It's up over 600%. It's outperformed Bitcoin, and it's outperformed ETH quite a bit as well. It's got a price of $97. I can remember not too long ago it was sub 20 here, and it's got a pretty decent volatility at about 100% or close there, or close to it. And so why I'm focused on this is because you're really starting to see a lot of growth in the Solana ecosystem. The amount of users that are on chain, the amount of development activity, the revenue that the network is generating, all really starting to pick up. This is a token and this is a network that post FTX, some people thought it was over for Solana.
We bought a lot of it not a lot, but we bought enough when it got really cheap, like down into the 20s and 30s. I mean, we definitely were buyers all the way down. The problem was we can't hold it anymore at Tasty. We can't trade it anymore at Tasty. You can't trade it anywhere at other than basically Coinbase or somebody else.
Right, off market.
It used to be able to trade this at Robinhood. You can't trade it there anymore. You can't trade it at Tasty anymore. You can't trade it at Webull anymore. You can't trade it at Interactive Brokers. I don't even know if they ever had it, but you can't trade it there anymore. So there are no online brokerage firms that can support any of these coins that are I don't even know if you want to call them altcoins, but you can't support them.
Yeah.
Outside of the big 3 or 4, there's nothing we can do, on our platform. So, we really don't, this becomes a really challenging situation for us, because I'd love to say, hey, we should buy Solana, but you can't on our platform.
Absolutely. I hope that we're able to bring that back at some point. I think we'll be able to offer that outside the U.S. at some point, I would hope. I think you'll see other firms, you called out Robinhood. They're doing that. So where they can't offer certain things in the U.S., they've expanded to be able to do that.
We're hoping to be able to do this. We're hoping to be able to do this in, the UK and other places. But still, it's kind of sucks.
Well, with the wallet, we will have a Solana network connection, and you will be able to get exposure to a lot of these tokens and things that you can't necessarily gain exposure to in a centralized approach. You'll be able to do that on chain. This is something I'm looking at. A lot of efficiencies, again, that are occurring here on the network. It's getting cheaper. It's getting more stable. There's some huge kind of updates or upgrades, if you will, that are coming to it. And you're simply seeing that network effect at play. And so as we jump through a couple more slides here, just to illustrate what I'm talking about, in the past year, the number of users, daily users on the Solana network are up well over 100%. So we've got some decent growth there. What you tend to see as a result is you have more users while they're using the applications on chain. They're using the network for what it is, and that's going to generate more revenue. And so the Solana blockchain, in terms of a business, in terms of the fees that it generates, you're seeing that revenue jump here really recently, up over 200% in the past 30 days, if we just jump to the next slide here. So that's kind of my case for Solana. I think it's something to keep an eye on, right? It went from 30 to 120. It could go back to 50 on its way to 100. Expect a lot of volatility in here, but it's something that I'm paying attention to. The next thing that I want to focus on is a recent launch, which is called Celestia. The token ticker symbol is TIA. It's got a price of $10, a market cap of right around $2 billion right now. Another one that, as you tend to see in these sorts of environments, out of the gate has just ripped higher and higher. But what Celestia is and why this is important, it's not necessarily saying, hey, go out and buy this token. Again, I have no idea what's going to happen. But this is a modular blockchain compared to what's called a monolithic blockchain. And what that means is that this blockchain does one specific thing very, very well. And I believe that you're going to see that as a theme as we move forward here. And so what this does very well is it's able to process data, or provides capacity for applications to store data on this modular blockchain. It doesn't verify or validate transactions necessarily.
Did we ever support that?
It's just come out in the last couple of.
Oh, okay.
It's more.
I was going to say, I don't remember.
Yeah, it's not something that we support yet, but again, things that we're working towards being able to offer, and really something that's representative of a larger theme that's happening in the crypto space is the growth of modular blockchains. And I think for 2024, everyone should really keep an eye on this. And this comes from the Cosmos ecosystem. So that's Celestia. And then the last token that I want to focus on here is Blur. This is the governance token for an NFT marketplace called Blur. Token symbol is BLUR. It's got a price of about 53 cents right now. You can see that's off of the highs from where it was previously, but it's also rallied quite a bit, like just about everything has here, up over 200% against the dollar in the last year. And what's interesting about this is that Blur has really overtaken OpenSea.
I've never heard of it.
Yeah, it's it's relatively
I haven't
new.
heard of it either.
Yeah, you've heard of OpenSea though, right?
Yeah, sure.
Okay, so OpenSea as an NFT marketplace is geared, I would argue, a bit more towards the artists or the creators that are minting NFTs, and not so much the trader. What's different about Blur is this is a platform through its user experience, its interface, some of its features. It's really geared towards more of the professional NFT trader. And so you've seen a ton of activity as a result. They have a very interesting rewards and incentive program. You can actually lend out your existing NFTs and use those as collateral. And what you've seen as a result is that the majority of NFT trading volume on Ethereum is now occurring on Blur. So this is just another area to keep an eye on. I think NFTs are certainly not dead. And as we tend to see in a lot of different kind of speculative environments, you're going to see the rise of NFTs come back here into next year. So those are three tokens that I'm looking at: Solana, Celestia, and Blur. And then just really quickly to hit on those themes one more time as we wrap it up. I think three key themes for the next year: volatility, modularity, and also layer twos, which gets us to what's happening on Ethereum. Ethereum has underperformed versus Bitcoin, for example, versus Solana, certainly. But I think the thing to keep an eye on here is going to be all of what are called the layer twos and their tokens. So those are things like Polygon, Optimism, Arbitrum. The tokens have all rallied quite a bit. But you need to think about these as businesses. Ethereum as a business, it's not just random magic internet money. It is a decentralized security layer that applications run on top of. It sells block space. You pay to use that network in the form of gas fees. I mean, since inception, Ethereum has generated more than $10 billion in revenue. more people use it, that network effect continues to grow. And I think what you're going to see maybe in 2024, these layer 2s are really going to outperform because they help to scale that network and they generate revenue. They sell block space or they package it up, make it more efficient, and sell it on the Ethereum layer 1. And so that's what this really is. It is very tangible in that sense. So those are my 3 themes and 3 tokens for 24.
So if you had an account, if you could only trade, ETH and Bitcoin or ETFs or whatever it's going to be, so your thinking is ETH's a little cheap relative?
Absolutely. I mean, if we look at that spread again, we're back to those lows at, about 500ths of a Bitcoin in terms of the ETH price. And that's been an area that we've seen, a little bit of a bid come into ETH on a relative basis. But yeah, I think that's also the way to express the macro view as it relates to decentralized finance, as it relates to a lot of what's happening outside of more of Bitcoin as a representation of crypto and truly what crypto is or what Web3 is. I think Ethereum is still the way to express that view, but it's still so early that from a flows perspective, Bitcoin it obviously represents a way to gain exposure.
Got it. Beautiful.
Awesome. Good job. Good job out of you. I learned something. I learned about a new coin too today. So awesome. We're going to take a quick 90-second break. Come back. We got more Tasty Live with strategies for your IRA next. So enough. We'll be back in 90 seconds. Even the S&Ps just turned green, up 5.